Hey, JD here. So we just took a rally-based rally entry, and we gotta see if it holds on here. Pretty good start. I mean, great first candle. So we'll see if it works. Okay, so this rally-based rally did its thing. You know, we saw 3 strong candles up, one little red, then a huge breakout candle. It broke higher than here, and this candle scared me. But yeah, this rally-based rally actually hit the target even. You know, my target would have been this high here, and it made it. So this was a textbook perfect setup and result. Let's count it down. 6, 5, 4, 3, 2, 1. Say it with me.
Easy money.
Hey, we need this higher low to finish out. Push through, break out. Break out, close on your top. Close on your top, close on your top, close on your top. Good close, push up. Now we get this higher low right here. All right, like we took a great double up. Got 15 seconds to hold on. Pretty good entry. Let's count it down. 8, 7, 6, 5, 4, 3, 2, 1. Say it with me.
Easy money.
Hey guys, how's it going? JD here. In this video, we're going to talk about how the debate over whether you should trade real pairs or OTC is completely over, right? Like there's nothing to talk about, right? And I'm going to explain why in this video right here, okay? So there's a big debate out there, and for people who trade binary options, where on all these different platforms, whether you should be trading OTC or whether you should be trading real pairs, okay? So for those people who follow me and been watching my channel, you guys know that I've been trading real pairs for probably over a month now. I traded it last summer and I knew it was better. I still can't even remember right now what made me go back to OTC. But anyway, I've been trading the real pairs, and it's just, the debate is over, okay? It's just over. Going from OTC to real pairs, it's like when you go from 15 indicators to finding price action. It's just not even a debate anymore about what to do, right? Like when you find price action trading, after you've tried pivot points, after you've tried, 5 to 10 indicators at the same time on your chart, after you've tried stuff that was kind of working, it sort of works, it works sometimes, you got a little hope that maybe it's gonna kick in and really start cranking. That's how it is when you're trading indicators, and then you find price action and you start winning second entries at a high clip. You start winning higher lows, lower highs at a high clip. Range, you get a handle on range, phase, and like, this is really easy, right? Once you find price action trading, price action setups, there's no going back to indicators. It's just no going back to indicators. And that's what it's been like for me recently here, going from OTC to real pairs. It's just not even close. And I'm not really talking about the win-loss percentage, okay? I'm talking about the edges that's available to you from trading real pairs. The real debate is over. Can they cheat you in OTC, right? I don't know, but probably, right? If you're having a whole bunch of close losses, they're probably manipulating the market in some way. We all know that manipulation is possible. Can we prove it? No, you can't. You just can't prove it. I mean, I record my trades, and I've been able to, send a couple in that was close. I said, hey, I really won this, and they still didn't pay me out, right? So in my opinion, yeah, they'll cheat you, okay? Even when you catch them red-handed, they will cheat you, all right? And I'm talking about all brokers, not all brokers, but in this binary options is kind of like the wild west at this point. All right, there's no regulation, so yes, they can cheat you, and it ain't gonna be no consequences. Okay, There's no consequences. But honestly, I'm not even focused on that, right? That's just something. That's just another reason why not to trade OTC over real pairs. But that ain't even where I'm coming from today. Where I'm coming from today is the simple fact that you have an advantage in trading the real pairs. I brought this website up probably every video this month. Currency strength meter. All right. I may have to just go on a video campaign to explain to you guys how powerful the currency strength meter is when you're trading the real pairs, when you're trying to scalp the Forex. Okay. Because when you're trading real pairs, you in the real Forex. All right. The numbers, the prices, you probably can go on TradeView and see that, oh, same price. You know, you could go on, in my case, I trade Osprey FX on the Trade Locker platform. My numbers look just like they're close, right? They're close to what's happening in binary options because it's the real Forex. So when you take that currency strength meter to see what's strong, what's weak, and then go target those pairs, I don't know if there's a better edge in trading other than, you know, looking at the order books, you know, and futures and stuff like that, and options and stuff like that, you know, where you see where the bulk of the orders are at, things of that nature. That's a great edge. But man, if you're scalping the binary options market, you know, if you're doing 1 minute trades, 3 minute trades, 5 minute trades, in my head, that's the scalp in binary options, man, that strength meter, I just, you know, the debate is over. Okay. The debate is over. Being able to see that the dollar is strong. Then going to look at the pound dollar. Yep, the dollar strong. You look at the euro dollar. Yep, the dollar strong. You look at the dollar CAD. Yep, the dollar is strong. To have that little piece of information, it just gives you an edge. Okay. And when you're a price action trader and you know which pair is strong, it's just like being so clear on the trend direction, right? When you know we're trending up, then you know to buy. When you know we're trending down, you know to sell. So that strength meter, it just gives you that extra edge that you just don't have in OTC, right? There's no edge whatsoever in OTC other than being able to just read the price chart accurately, okay? And so yeah, I won in OTC just because I have the ability to read a price chart, but having that other edge, it just trumps everything. Okay. It just trumps everything. And also, since I've been trading the real pairs, it's just forced me to notice things I hadn't noticed before. And so I said this in a while ago in a video. I'm gonna say it again. You want to do the opposite of what the broker wants you to do. Right? The broker ain't your friend. The broker doesn't want you to win. All right. The broker is the enemy. They're the market makers. Yeah, they give us this opportunity to be able to trade, but at the end of the day, they're trying to take your money, right? So you want to do the opposite of what the broker is telling you to do. And since I've been trading real pairs, it's kind of like my eyes have just been open to the traps, right? So here's what I mean by that, right? Okay, I'm gonna give you a few examples. Example number one, they're not offering you 92% in OTC to be charitable. Okay, right? They're not making the OTC pairs more enticing by offering 92% for no reason, right? I've gotten 92% in the real markets, but it's very rare, right? If you get 90, you're really doing good. On average, I would say 88, 87, really 87. 87 is probably about the average payout for the real pairs. And you got to be up at 4, 5, 6 in the morning to get that, okay? Sometimes it's still not around 9, 10 o'clock, you can still get 87, but it's going to be like 1 or 2 pairs. That's it. It ain't going to be like 5 or 6 of them, okay? So what I'm saying is this. They're not offering 92% to be charitable. It's a trap. And I don't know what it is. I don't know how it works. Okay. My guess, I'm gonna throw a guess out here since I'm just talking. Hey, this is just my opinion, and I clearly just said this is a guess. My guess is this though. Since they're using old charts and they're kind of just running old charts back programming, I don't know. Actually, I don't even know if I should put this guess out there because I really don't know. I'll be honest with you guys. Hey, I don't know how they steal. I don't know. Okay, I know it's possible. I know some way they can. This is what I was about to say. Because this is just what I've noticed. That's all I can go on. In OTC, you will suffer a lot of close losses. My guess is that they have some type of computer program that if prices is within so many, ticks, they can push it in their favor. That's my guess. I don't know, right? I don't know. I'm just guessing because when I was in OTC, when I did lose, it was a close loss. Normally, I switched to taking longer term trades, so I was so far ahead that it didn't matter. I was hitting home runs. So if you are going to trade OTC, I would suggest taking longer term swing trades rather than trying to scalp. Just a tip. If you're going to stick with OTC, take longer term trades, because it seems like if it's close, it's going to go in the broker's favor in OTC, right? So they're not offering you 92% for nothing. The other thing I've noticed is about this Asian session situation, okay? The Asian session opens up at around 7 p.m. Eastern Standard Time. That's about the same time that the real pairs come back online. They shut down at about 4 p.m. Eastern Standard Time. Then they be coming back at about 7 p.m. Eastern Standard Time. I've always noticed when they come back, they're 72%. That's the high. 72%. Actually, they always come back at 72% or 50, right? So you have to ask yourself, why is that? The Asian market is open, right? So the euro yen, the pound yen, the dollar yen, the Aussie dollar, the New Zealand dollar. Why not give us 88% on those? Why not give us the average 87% of those when their market is open? Again, I say, they're trying to entice you to trade OTC. So for people who can't trade until nighttime, right? For people who work 9 to 5, right? And you can't even get in the market until about 6, 7, 8, 9. Why wouldn't they give you the opportunity to have an 87% payout and the Asian market is open, right? So again, I don't know. This is what I'm noticing. This is what I'm thinking. You know what I'm saying? While I'm on my conspiracy theory right here on traps, on OTC traps. Here's my opinion. From 7 p.m. to 3 a.m. in the morning, they are trying to entice you to trade OTC. And it must be for a reason, right? It has to be for a reason that they won't offer anything higher than 72% from 7 p.m. to 3 a.m. You gonna only get 72%. So that forces people who can't trade the who can't trade the intraday, who can't trade between 9 to 5, because most Americans are working 9 to 5. It forces those people to go into OTC. All right. Why? That's the question you got to ask yourself. Why? Why do they want us to trade OTC over the real pairs? It's so. And the third thing I've noticed. Let's not even talk about crypto. I mean, Bitcoin, they don't never give a good payout on Bitcoin. They don't never give a good payout on gold and silver, right? That's just out. Okay, that's just out. They shouldn't even have those up because they never give a good payout on them. Why? Why not? You know what I'm saying? If it's all legit, if you gonna make money off of our commissions, if you gonna make at 92%, they making 8% every trade. If you gonna make your 8% every trade, 8 to 10%, if you offering us 90%, why not offer better payouts on silver, on gold, on Bitcoin, on crypto? Why not have better payouts on those assets in the real market? If you're making all your money from the commissions, right? If you're making all your money the way you're supposed to be making your money from the fees, why not offer better payouts on those? You still gonna get your, if you offering 92% on OTC and you getting your 8% that you're supposed to be making, why not offer the same amount on the real pairs during the Asian market, on crypto, on gold, on other assets? Why not? It's my thing. Because they want you to trade OTC for some diabolical reason is what I'm thinking. Okay, so listen, real pairs is your safest bet. But other than that, is where you have an edge. It's where you have an advantage. And we're going to go to some charts right here, and I'm just going to freestyle it. We're going to go to the strength meter first, see what's strong, see what's weak, and then we're going to see if we can find something for price action entries. So I can show you, hopefully it works out that way, that trading real pairs is better. And this debate for me is over. All right, let's go to the charts. If you want to learn price action trading, you can visit www.jdhyder.com, where you will find the IOTS price action trading system, which is the course that you need to begin to increase on the sudden. All right, so we're on the charts, but my new workflow is to always start at the currency strength meter. So let's run over there first. All right, let me refresh because it's probably not like this anymore. I'll just keep this website up now. This is okay. Pound, that's our target. Well, actually not necessarily our target. Pound, we want to go with pound, and we want to target Swiss and the yen, right? So I'm gonna go look for the pound Swiss. What the pound doing? Let's see, we got to find, okay, here's a pound. Oh, I wanted pound Swiss first though. Pound Swiss, payout only 32%. No surprise there. Look at it though. Look at it. Let me get my tool up. Okay, so, we got the pound Swiss here. After this push up right here, you probably knew it was strong, right? You probably no doubt that it was strong. So the meter, probably had all these at this point. I already know the Swiss has been weak all day, so this was an easy one to find. So if back here, let's just say that hopefully, they was offering 87%. Let's just look at the entries you take after that, right? So after you have the information that, all right, I want to go with the pound, I want to go with the Swiss, so that means I want to be buying pound. Let's just see some entries you could get, right? So here we have a new high. Okay. So we're going to push down, push up. That's your first entry. Push down, bounce right at the 21 EMA. Let me say it before I even mark it up. Your best entries are what? On, off, or around the 21 EMA. So right there, you go right there. 1, 2, 3. Easy scalp. Easy scalp. Then what do you get? Another one. This high, push down, first entry. Push down, second entry, the EMA. Okay. So I go right here. Boom. 1, 2, 3. It was close, but it wins. Right. Then what do we get? We have a low. We pushed up, we came back. Look how we bounced right off of 21 EMA. We got nice rejection here. Right. So then we need a candle to push higher, and we get one right here. Right off the 21 EMA, pushed higher, closed on this top. That's a beautiful signal candle. Let me say it again for all of my new subscribers. Hit that subscribe button right now. Look out for your boy. Let me say this again for my new people. The best entries are on, off, or around the 21 EMA. Okay, so we go right there. 1, 2, 3. That's home run. Okay, and if that didn't do it for you, you kind of get one more. This one is tight. This one is a little congested, but you got the new high right here. We got the new high right here. Now this is a little tight and congested, but it pushed down. This little candle right here, I'm gonna sit here and let you see it. That little green, it ticked higher by 1 tick. That qualifies. I mean, I know it's small, it's very congested, but again, we know that the pound is strong. We know the pound has 5 bars, the Swiss 1. So look, we're gonna take some shots on this. Then we push down. What do we get? Another beautiful signal candle. Beautiful hammer up, closed on this top, bounce off of what? The 21 EMA. So let's say it again together. The best entries are on, off, or around the 21 EMA. You go right here. Bam. 1, 2, 3. That's 4 in a row. I mean, for me, that's a day. I'm just gonna say, so you know what? That's a day. That's a winning day. I'm packing it up. It doesn't even matter what happened the rest of here. I'm packing it up. All right, so let's go back to the meter. Now I go back to the meter quite often and refresh because things change, right? Things change. Man, my computer is, I don't know what's been going on with my internet lately. It's messing everything up though. This thing's just froze. I clicked on this button 3 times. Let me pause the video so I can get things worked out here. Be right back. Okay, let me just refresh again. Okay, nothing's really changing. So still got pound Swiss. Let's look for maybe pound New Zealand, pound dollar, see what's going on those. I don't think they offer pound New Zealand. Pound CAD. Oh no, we don't want to mess. See, now this I wouldn't mess with. The CAD is too strong. That can go either way. No clear advantage. See? No clear advantage. You take the ones that's a clear advantage, like pound yen or pound dollar. Let's look at those. Here's the pound dollar. No surprise. Boy's been climbing, right? So it all depends on where you see it at, There's plenty of entries through here. Let's look at the pound yen real quick. I think I got it up here. Right here. Pound yen. Hey, this is at 83%. It's still kind of cracking. All right. Same deal, right? Let's say we see it around in this area. Okay. You got the new high here. Push down. First entry right there. All right. Push down. First entry right there. Push down. Now, another way to see second entries is just by the colors. If you can just see 2 legs back. Oh, this whole row is a leg, pushed up, broke higher. Clearly, that's your first entry. Then, even though this is only 2 bars, I consider that a leg back. So you just get used to that when you're counting. That's how Japanese candlesticks help you see second entries, because you can just count the legs back. And even though it's only 2 bars, it's still a leg back. It broke lower, right? So it made 1, 2. It made 3 attempts to go lower, and it basically bounced at the same spot. Then you get a beautiful candle, opened, didn't even tick down, closed on this top. Signal candles really don't get any stronger than that. You go right there on second entry long, home run. 1, 2, 3. Okay. Then here, this is a little tough. I'll tell you how I will see this one. Let me grab this area here. After this good, beautiful run up, we ran into, I consider this a little range. Ran into a baby range. I could have did that last one better. Ran into a baby range straight through here. Okay. And then we broke out. So I'll take this breakout candle. I am mad at taking that breakout candle right there. Hold on. Let me put my entry back here too. Take this breakout candle. 1, 2, 3. There you go. That's money. Then we got a new high. Push down, first entry. Just look at the stems. This stem is higher than this one. That's a push down. That's the first entry. Don't seem like much. And then another push down. Bam. When this candle right here breaks higher, that's your second entry long. Right there. 1, 2, 3. Money. Money. Then you get, this is a low. Push up. You can consider this a higher low. Huge signal candle, broke higher. You go right there. 1, 2, 3. Bam. Money. There you go. 4 in a row again. 4 in a row again. It doesn't even matter what happens the rest of this ride. I'm calling it a day right there. And as you see, it kept climbing, right? But hey, 4 in a row right there at $115 a trade. That's $400. $400. And guess what gave me the edge to do that? This strength currency meter. I knew to go with the pound. Are you guys picking up what I'm putting down? Why trade in OTC when it's this kind of advantage in the real pairs? All right. OTC, you just better be able to read that price chart. You know what I'm saying? You better be able to read. Hey, you better be able to read that chart. I mean, you got to read. I'm still reading the chart here. Don't get me wrong, but I'm reading the price chart with an advantage, with an edge of knowing, what I'm targeting. What was that? Oh, that was the pound yen. So pound yen, you clearly see the advantage. Pound Swiss, you clearly see the advantage. All right. Now let's drop to another one. Let's go. Last one. We do one more. Let's look at the Euro Swiss. Let's look at the Euro Swiss. Or here's Euro Yen. That's the same deal. It's been what? Climbing. It's been climbing. Okay. Let me see that Euro Swiss though. It should be in here somewhere. Two euros. Oh, it's unavailable. They hating. All right. Euro yen. Now, people, I mean, this is tough because yes, it's trending up, but it's very choppy. Okay. So you really have to be careful. So like here, you may see this as a push down, first entry, push down, second entry long. Right here, when this candle breaks higher, you got this leg up. This is kind of the center of the pattern, so you will be expecting another leg. So yeah, you go right here. Okay, but then if you go right here on this higher low, which is a low, push up higher low, it's kind of too far away to be a higher low, and you're going right into the highs. But you probably may take this one and lose. You may take this one and lose. Let me change the color. This one would be enticing just because that's a beautiful signal candle. And it's right off the EMA. But you're going right into the highs. But you still may do that because you're expecting a leg of this distance. So, hey, you get caught right there. All right. But then you got a new high. Push down, first entry. Push down, second entry long right here. That's a kind of a weak signal candle. It didn't break higher. It left a lot of stem. I really don't like it, but if you took it 1, 2, 3, it worked, but we ain't gonna mark that one. But what looks a little clearer is this right here. Push down, first entry, push down, now second entry long right here. The other thing about this one, this is a low. You can clearly see it made a higher low, so you're making higher lows. That's a good sign. And if you go right here, 1, 2, 3, that's a win. Okay. Then you kind of make a double top here. Push down, came up. When this candle breaks higher, you may go because the EMA is holding. And again, now you got another low, higher low, higher. You got another higher low right there. You may go right here. But this is much more of a risky entry because you can't really call it a second entry because these are matching tops. And this one may even be a tick higher. This one is a little rough here. And then here you get nothing. Push down. The first entry just kept going. So you got to start the count over. Then you push down, break high here. This is still a first entry. You got to keep the count going. So that's tough. But then if you see the low here, push up, higher low, you go right here. Bam. And that's your 1, 2, 3. Okay. And there, look, now you got this boy finna go higher again right now. If it's 72%, I got itchy. I got itchy right there. If it was if it was 89, I'd take that. But there you go. So on this one, you go 4 out of 5. Still not a bad day, right? And it's all because you knew that the euro is stronger than the yen. I'm saying, folks, the debate is over. What are we doing out here? What are we doing out here? I'm thinking I may have to go on a don't trade OTC campaign because this edge here, everybody doesn't know about this edge. Everybody doesn't know about the strength currency meter. Some people don't think it's valid. Hey, try it out, right? You can always, this is what demo is for, right? if you don't believe what I'm showing you here, which I don't know why you wouldn't, I just showed it to you. Go on demo, but go to the strength currency meter first. See what's popping, see what's happening, see what's strong. Pound is strong, euro is strong. Let's go look at the AUD yen. For some reason, I just want to do one more. I'm not going to even mark this one up. Let's just see what's happening. Let's see if the AUD is clearly stronger than the yen. Let's just leave it at that. It is, right? So this one I'm gonna do a different way. This one we're just gonna look at the market cycle. Here we were ranging, right? We finally break up. This is your first leg up, trend break, retest to new highs. There's the market cycle happening just as it should be happening, because the strength currency meter told us that the AUD, let me get rid of those marks, the AUD is stronger than the yen. So go with the AUD. And if you understand the market cycle, you understand the rule of two, and you understand price action entries, man, the debate is clearly over, people. Trade the real pairs. Use every advantage that you can. Stop falling for the enticing trap of 92% and win and grow your account at taking them 87% real pair setups where you have an advantage in the market if you're using the currency strength meter combined with price action trading setups. All right, so that's gonna wrap it up for me today. I hope you got this one, because I'm trying to tell you guys, the debate is over. All right, it's over. It's time to go to a new level in your trading, and this is going to seriously help your winning percentage. All right, so this is a great time to like, share, and subscribe. I greatly appreciate you guys. If you was digging this one, hit me in the comments. I know y'all gonna have some comments on this one, so let's talk about it. All right, so my name is JD, and as always, I wish you increase on the Sutton. Bye-bye. Hey, if you have time, watch this video on discipline to take your trading to the next level.